Hello everyone, welcome to Options with Doug, streaming live daily at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As a reminder, the focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis, and I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis and regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow on Bookmap and market maker hedging flow on Spotgamma Hero to confirm my thesis and for entries, for short setups, entries, and exits. Okay, questions and comments are welcome, and I will be watching for questions and comments in Discord in the Options-Doug channel in Discord and also the chat in YouTube. So again, please post your questions and comments. And if you have any stocks that you want me to take a look at, let me know. And JEC says there were a couple of really great setups today. And yeah, I saw a couple of great setups today. I'll go over the ones that I saw, but there were just a couple good ones, and the main one was the S&P 500, and I'll talk about that. All right, let's get started. What I want to go over today, my agenda for the day, is first of all go over the news economic data that's coming out this week, and it's a fairly light week. And any events, and then we'll go through our positional analysis and then finally talk about the setups. So first of all, the economic data for this week. Starting tomorrow, there is some PMI data coming out. You know, this is housing data, PMI data, and then this is showing this consumer confidence number at 10 a.m. tomorrow to be of higher significance. So a variety of data tomorrow. Again, PMI, consumer confidence, and then on Wednesday, March 1st, more PMI data, ISM. This is indicating the 10 a.m. data of high significance. And then on Thursday, the jobless claims. And then Friday, more PMI data, ISM PMI data. And notably, the employment situation report is not here, and I checked a schedule online, and for some reason it's coming out next week on March 10th. So I don't know why. Normally it's the first Friday of the month for the employment situation report, but anyway, it's not this week. It'll be next week. So that's what it is. Again, a lot of PMI data. 10 a.m. data, nothing that earth-shattering. All right, let's go through our positional analysis now. And I'll start. This is the S&P 500 futures, ES. And before I dig into this chart, I'm going to take a look at a higher time frame. And this is Thinkorswim. This is the SPX 20-day chart in Thinkorswim. And this is showing just price and the Spotgamma levels for today. And these are provided to Spotgamma subscribers, and they're showing the key gamma levels again for today. And the things to note, the put wall has moved down now to 3,900. It was 3,950 on Friday, moved down to 3,900. And the key gamma strike remains at 4,000, and that is also the volatility trigger. And just quickly, the put wall is the strike with the largest net negative gamma that can be expected to act as support. The absolute gamma strike is the strike with the largest absolute gamma, positive and negative. And the volatility trigger is Spotgamma's proprietary gamma flip level, where market makers' position on the gamma curve would be negative below and positive above. And I'll talk more about that in just a few minutes and the consequence of that. And then way up here is the 4,200 call wall. And that's the strike with the largest net positive gamma, and that can be expected to act as resistance. And there Spotgamma noted other resistance levels before that, and those will be we'll see those on my Bookmap chart. All right, so those are the levels that are in play, and then we can take a closer look. Again, a Thinkorswim chart. This is just for today. This is a 1-minute chart. And let me actually, I had this set before on it, and I'm not sure what happened. All right, let's try this again. Okay, this is today, SPX, just a zoomed in view of the other Thinkorswim chart that we looked at. And the thing to note here is the resistance, the reversal at the 0 gamma level at 4017. So again, this is SPX. Then the move lower below the 4,000 level, and again that's the key gamma strike and also the volatility trigger, and then the reversal lower there. So it acted as resistance. It acted as support before, then resistance. So those are a zoomed in view of the levels that are in play today, and definitely this 0 gamma level was an important level, and that has been an important level in the past. All right, let's go to Bookmap now, and I'm showing the levels on my chart in 2 columns. This is the first column. These are Spotgamma cloud notes that are provided to subscribers in cloud notes that are updated automatically. Now there is a difference between SPX and ES, and the price difference. Spotgamma is still using a 10-point difference, and I just did a quick calculation today, and I came up with about 6 points. So I have moved, let me just show you for example, this 0 gamma level, I have moved my line down to this level right here. So I moved it down 4 points. Oh, actually that's this line right here. It without a label, no label, just this line. So that is the closer to the 0 gamma level, and notice that price moved up just a little bit higher, but that level definitely acted as resistance. And then this line right here was a resistance level noted in the Spotgamma AM Founders Note. So those are the levels that are in play, and then here's the volatility trigger at 4. This is what Spotgamma is showing as the 4,000 level, and I have moved my line down here. So you can see the resistance at the 0 gamma level, the 4017, support at 4,000, and then the resistance at 4,000. And order flow provides a pretty good clue as well to price action. Order flow shown in Bookmap. Notice the stop run shown by the yellow line there up to that 0 gamma level, and then the shift in order flow, the yellow line, the stop orders shifting down, as well as this dark blue to pink line, that's cumulative volume delta, also shifting bearish. And then finally, notice all the pink dots coming in. And that is corresponding with the cumulative volume delta. So after the reversal, this kind of the consolidation, then the reversal at the 1017 level, a lot of sellers come in, market sell orders, all the pink dots, and confirmed. This is all confirmed by order flow. And then the key to this was we'll look at Hero in just a minute, that traders were taking negative delta positions well before this reversal lower. So this was a great setup in ES, and I'll go through this in a little bit more detail. So I'm just talking about the levels now and the order flow. So that was this is the price action in ES today, the S&P 500, ES, SPX, and SPY. And the levels are shown on the charts. I know it's a little bit confusing, and just also want to point out, so we have the Spotgamma cloud notes here on the right, and then the C levels. These are my notes, so I can adjust these wherever I want. So I'm showing, for example, this resistance level down at a more accurate level than this is the SPY 400 key gamma strike. And then there's this SPX 4000 level, and finally the ES 4000 level. All right, so those are the levels that are in play for today. And now let's talk about shifts in levels. So first of all, there were a few shifts in levels, all lower. First of all, the SPY volatility trigger dropped down from 401 on Friday to 396 today. And then since I normally don't talk about the 0 gamma level, but since it's in play today, the SPX 0 gamma level dropped down from 40.59 on Friday to 40.17 today. And then I've already mentioned the SPX put wall dropped down from 39.50 on Friday to 3,900 today. And then finally for QQQ, the key gamma strike dropped from 300 to 290. Okay, so all shifts lower, and so JEC says his adjustment today was 5.45. Yeah, close enough. I just did I'm sure that's more accurate than what I have. I just did a quick glance at a watch list. I did my quick and dirty method that I talked about on Friday last week. Okay, now let's take a look at the S&P 500 absolute gamma levels, and we'll see where those levels come from. So here's SPX, absolute gamma levels, and this is showing here's the zero line, and above is positive gamma or call gamma, and below is negative gamma or put gamma. So the positive gamma, call gamma, is shown with the black bars, and the negative gamma or put gamma is shown by the teal bars. And this is market maker's position. So here is the SPX 4000 level, and that is again the key gamma strike or the absolute gamma strike. And the 3900, that is the put wall. The put wall is the strike with the largest net negative gamma. And there was a question in Discord about this over the weekend, about the call wall, why it was a certain level. The put wall and call wall, the way you calculate this is, and it might be easier to look at the call wall. That's what the discussion was about. And this is net positive gamma. So the call wall is the strike with the largest net positive gamma, and that can be expected to act as resistance. And the way you calculate this is take the positive gamma and subtract the negative gamma, and you come up with the net number, and that is the number with the highest, the highest number, highest positive number is the call wall. So even though this number is this level is way out of play and does not have as much call gamma as the 4150 or 4100 level, the absolute gamma level is still, or the net positive gamma level is still higher than these other two strikes. So that is how those wall levels work. And here's SPY. So for SPY, 400 is the key gamma strike. 390 is the put wall, the strike with a large net negative gamma, and that's pretty obvious. And then the call wall is up here at 420, matching the SPX, and pretty much out of play today. And the notable thing here, there are a couple things actually. First of all, the put gamma below the 400 level, that's probably the most noticeable and significant item there, is the put gamma down to 380. So from 380 to 400, and especially 390 to 400, the concentration of put gamma. And then there is some call gamma between 395 and 400. Okay, so those are the gamma levels. This is where those levels that I was just talking about on the chart come from. And you can clearly see the, for example, SPY, the put wall, the absolute gamma strike, and the call wall. It's not visually as obvious, but when you do the calculation, that would come out to be the call wall. And then also note the significant gamma at the 395 level. All right, that is the S&P 500. And one other thing that I noticed that was interesting this morning is this combo strikes. So this is combining gamma for SPX and SPY, and then shown in terms of SPX levels. And note all the put gamma down below here, 3950, 3960, yeah, 3950 down to 3800. So again, those are combo levels, SPX and SPY. And JEC says he started paying attention to the combo a lot more. And yeah, that's a good idea, because the SPY gamma is typically much larger, much more negative than the SPX gamma, but the ES and the S&P 500 certainly responds to SPX levels. So you definitely have to pay attention to the gamma levels, and for both SPX and SPY when you're trading any one of those instruments, ES, SPX, or SPY. And thanks for pointing that out. Okay, so now let's take a look at the NASDAQ. And for the NASDAQ, I just look at QQQ. NDX is not significant. So for the QQQ, 290 is the key gamma strike. And again, I noted that dropped from 300 on Friday. And then for QQQ, let's see, where's the put wall at? That, oh, the put wall is also at 290. So that is the key gamma strike and the put wall. And then 310 is the call wall. So again, I think notable is all of the put gamma down below the 300 level. Okay, so this those are the gamma levels, and you can see where the you know, especially the key gamma strike, the put wall, the call wall, you can see where those come from and why those levels are what they are. All right, let's take a look at data now. And the thing that I always like to look at is the gamma notional. And this is market maker's position on the gamma curve. And SPX is shown in the left column, SPY gamma notional in the middle column. So that shows you that, and this is fairly typical, that the gamma notional for SPY is 3 or 4 times greater than gamma notional for SPX. And then finally QQQ gamma notional on the right. And these levels have all shifted more negative from last week, from Friday, and have SPY especially has remained in the negative gamma regime for quite a while. And again, this is market maker's position on the gamma curve. And what this means, in a negative gamma environment, traders are long puts, market makers are short puts, and they have to sell futures as price drops to hedge their delta exposure. And then if price increases, they can buy back their short futures. As price rises, implied volatility drops, and their delta exposure decreases, and they no longer need those short hedges. So these levels, again, all shifted more negative from last week. So last week, SPX gamma notional was minus 381, and today it's minus 530. And on Friday, SPY gamma notional was minus 1752, and today it has shifted more negative to minus 1901. And QQQ has shifted more negative as well, from minus 538 to minus 735. So all maintaining a fairly significant negative position on the gamma curve. And again, what that means is market makers are trading with price to hedge their delta exposure, and that can tend to increase volatility in a negative gamma environment. Let's take a look at the Vanna charts, and we'll see a visual representation of that concept. This is SPX. What this chart is showing is market makers' delta notional on the vertical axis and price on the horizontal axis, and this shows how their delta notional changes with changes in price, and the green line shows how it changes with changes in implied volatility, and that is the Vanna effect, the change in delta with a change in implied volatility. And so this is just showing, again, market makers' delta notional will increase as price decreases, and they have to sell futures to hedge their delta exposure since they want to remain delta neutral. And then the black line is showing how their delta notional changes as time passes, and that's the charm effect, the change in delta as time passes. And we can see how that has changed for the last few days. So more negative, a little bit less negative on Friday, and then more negative again today, but all still negative. I'm just stepping back a couple of days, so still very negative for SPX. Here's SPY. Again, remember gamma notional is quite a bit larger for SPY than SPX, and notice the curve is a lot steeper. And then here's QQQ. Okay, so the last thing that I want to take a look at is my key gamma strike list. And notice I have pared this down quite a bit. These are the stocks that I trade on a regular basis, and it was just too time consuming to track more stocks that I typically look at but really don't trade on a regular basis. So I've trimmed this down, and this is my, and also this watch list will fit on the screen for the Hero dashboard. I don't have to scroll up and down. I can see all these stocks in one screen. So I've simplified a bit here and just tracking these stocks. And this is showing the key gamma strike for the previous day, for Friday. That's shown in the right column. And then the D column, this is the current key gamma strike, and this is for today. And then I color code these. And red indicates that the key gamma strike dropped from the previous day, and green indicates that the key gamma strike increased from the previous day. So notice for both NVIDIA and Microsoft that the key gamma strike increased last Friday and then dropped back down today, and a pretty significant drop for NVIDIA there from 240 to 220. But it is a volatile stock, and that those levels can move around quite a bit for NVIDIA. And then also there's the drop in the key gamma strike for QQQ. Okay, so I've gone through my planning process, looking at this is my positional analysis, my planning process for the day, and based on this, I was bearish, not strongly bearish, but definitely bearish, neutral to bearish, or I would say bearish to neutral, really more bearish. So that was based on primarily the drops in levels, the build in put gamma, negative gamma below the current levels. Okay, so that was my thesis for the day, and now let's take a look at setup. So we went and looked at the ES chart, and let's go take a look at Hero. So we've looked at the levels. We know that price reversed, consolidated and reversed at the zero gamma level, the SPX 4017 zero gamma level, and that is just about right there. And then the big clue to this was the bearish hero signal, and this is a combined signal. SPX, and SPY. And Spotgamma used to call this ES. This is what, if you're trading the ES futures, this is what you want to take a look at. And you can clearly see the divergence there in Hero. There's a small increase in Hero here, but the trend is definitely down, making lower highs, and that comes into play as prices consolidating just below that 40.17 gamma level, and that set up a great short. And we looked at order flow. Let's go take a look at that again. Order flow confirming that. So the way I trade this, and this is the kind of setup that I like to trade, is a divergent setup. It gives you plenty of time to watch hedging flow, order flow, watch for levels, potential reversal levels in Bookmap. So this is the first step. When you see this divergence, especially starting, I'm going to zoom in on this. So just looking here, seeing this divergence start as prices consolidating here, and then just looking for a reversal. So you see this divergence, step one, then go to Bookmap, and we'll go back to ES, zoom in on this level, and then you're just watching order flow. So you see the stop run up to the 40.17 level, then a shift in order flow, more pink dots coming in, aggressive sellers, consolidation at that level, and then the drop there. All those pink dots coming in, and the shift. Now starting the stops start to drive that lower. That's shown by the following yellow line there. Those are sell stops, helping to fuel that move lower. And then CVD, cumulative volume delta, is confirming that move lower. So step one, again, you see the divergence in Hero. Step two, you go to Bookmap. You see potential reversal level. Up here with this resistance level and the 0 gamma level, and then it's confirmed with order flow. And let's take a look at SPY now. And here's the setup in SPY. Now these are my levels, so there are no Spotgamma levels for stocks or ETFs, just ES, NQ, and RTY, I believe. Okay, so here is the, again, C levels. I can change these levels. I calculated the correct level for the SPX level on the SPY chart today. I just calculated the ratio of SPX to SPY, and I talked about how I do that on Friday. Just compare charts, minute charts for each, check a couple, 2 or 3, 4 levels. And so I know that this is correct levels, and then I have the so those are the SPX levels, and then I'm also marking some of the key Spotgamma levels. So there's the 400 key gamma strike. All right, so we can see the reversal here in SPY as well, and Here we can see again a breakdown consolidation at this level, this sell sweep coming in, or actually that's a buy sweep and a seller's absorbing that. Then the pink dots, price moves lower. So you could have traded this any number of ways. With ES, you could have traded futures, SPY shares, SPX, or SPY options. Any number of ways to trade that. All right, so that was the S&P 500 setup. And let's take a look at some other setups now. All right, so there's a question in YouTube. Hey man, what map chart is this? If you're talking about the chart with the green and pink dots and the heat map, that is Bookmap. And it's showing order flow. The heat map is showing the history of the resting liquidity in the order book. And the pink and green dots are showing market orders, market buy orders, green dots, and that is delta. So a green dot means that buy minus sell is greater, is positive, so that's shown by a green dot, and just the opposite for a pink dot. All right, here is the Amazon setup. Not a lot of range, pretty similar setup to the S&P 500. And here's what I saw in Hero, again a similar setup for Amazon. And by the way, for the S&P 500, I'm starting to look at the combined chart to give the I think the most accurate signal. And we'll take a look at this, and actually let's go on to Amazon, then we'll take a look at the SPX and SPY charts separately. So here's Amazon. I'm going to zoom in on this. This vertical line here is a large block trade, and it kind of obscures the hero line. So I'm going to zoom in so that that level is not in view. And this is what I saw this morning, another divergent setup, not quite as clear as the setup for the S&P 500. So there's the divergence. And again, once I see that, I'm going to Bookmap. And let's go back to Bookmap, look at Amazon. And there's the trend break, a sharp jump up, trend break, a buy sweep, and then a reversal there at the point of control and VWAP, and a quick drop lower. And notice the shift in cumulative volume delta from bullish to bearish. Not a lot of range, you know, good for about 1 point or so, where you, depending on where you got in. And that's fairly typical today of most of the stocks that I follow. Not a lot of range today. So that's the Amazon setup. Okay, so the comment, Jerry says, thank you, Doug. After your explanation, I understand the logic to calculate the wall values. You're welcome. Yeah, it's pretty simple. Just for call wall, call gamma minus put gamma, and just the opposite for the put wall. And JEC says he traded SPY options today. And yeah, he's looking at the combined chart as well, the SPX and SPY. And that's the easiest way to look at both of them combined. You see the total influence of all the SPX and SPY options trades, both zero DTE as well as the longer term charts. So there's a question in YouTube. In Hero, you use the 60-minute period and prefer all over next expiry. So I use the all day. So let's go, next stock that I want to look at is Meta. So let's go back to Hero and look at Meta. And then I'll show my settings. So this is Meta. Now I do look at, first of all, I do look at zero DTE primarily for SPY and especially for SPX, just to get a clue of what traders are doing. But just for general purposes, I'm looking at the total line. And for those of you who might not be familiar, I can change what I'm looking at here. And just for Meta, for example, that's next expiry would be Friday. For all these stocks in my watch list, they all have Friday weekly expirations. And then SPX, SPY, and QQQ have daily expirations as well. That's where most of the zero DTE trades come in. So I tend to first just focus on all trades. So this is the next expiry as well as all significant expirations. And then this is the rolling window period. This is the look back. It's like a moving average. So with the 1 day, I'm looking at this cumulative sum of all of the options trades, calls and puts for the entire day. And I typically leave it at 1 day. What Brent Kachuba, the founder of Spotgamma, has talked about this a bit recently, and it seems like to me that he is tending to, rather than change the rolling window, just zoom in on the chart like I'm doing here. So I'm just rolling my mouse wheel and scrolling, moving back and forth. So I'm scrolling my mouse wheel and panning to zoom in and out. So that's typically what I do. So I'm using total signal, all expiry, and the full 1 day look back period. Now toward the end of the day, I may shift to a shorter rolling window period, but I typically do most of my trading in the morning, and I leave it at the 1 day, the full day rolling period. Another thing that you can do is separate out puts and calls, and I find that provides a lot of insight as well. So here we can see for Meta, for example, that traders are selling calls and they're buying puts, but it looks like the call trades are primarily driving price action. You can look at this number as well, this notional value, and see this is over 5 times greater for calls, the orange line, than puts. Both are negative, but the call line, this notional value, is much larger than the put value. All right, so let's go take a look at Bookmap now. Take a look at Meta. And remember that hero line was dropping all the time. And there are a couple of setups here. This quick reversal, buy sweep up into the 173 level. And if you weren't fast enough to catch that, then this was a little bit easier. This reversal around 10 at the 172 level and VWAP just below that. And again, remember, hero is negative. And then this is confirmed by order flow. The all the pink dots there, you can just see that on the chart, and then the bearish, the following cumulative volume delta. So there's Meta setup. Let's take a look at Microsoft. So there's the setup in Microsoft. And notice the gamma levels that are in play here. And we'll take a look at Hero in a minute. There was a confirmation for a long and a short. And I think this, obviously this reversal at the 252 hedge wall was the better setup. So making lower highs, lower lows, and then the break with the sell sweep there at VWAP. All right, let's go take a look at Hero. So now I'm back to the total signal, all trades, 1 day rollback period, or I'm looking at the data for the entire day so far. There's Microsoft. I'm going to zoom in on the morning. So there's the confirmation long. And then confirmation of a reversal, although it came in a little bit late. Let's just see if there's any insight by separating out puts and calls, and not really. So that was Microsoft. And now let's take a look at NVIDIA. So here's NVIDIA. And this price action has been pretty typical for NVIDIA recently, is this morning chop for the first at least half an hour. Just chopping in a range. And let's clean that up, zoom in a little bit more. And that doesn't provide any clarity. So not really the most clear signal. Hero makes lower highs, price makes lower highs, then this jump up, kind of this fake out. Hero drops, and then price responds a few minutes later. So not as easy a setup as some of the other stocks that we have looked at, and certainly not as easy as the S&P 500. So let's go take a look at Bookmap now. See, there's all that chop in the morning, then the breakdown, and one clue in order flow here that is helpful is the bearish cumulative volume delta. And you can see all the pink dots coming in, especially on the last 15 to 20 minutes of this chop. And then this is not much range at all for NVIDIA. 235 to 238 is pretty insignificant. Insignificant range for NVIDIA. All right, let's take a look at QQQ. Yeah, I got a small scalp in NVIDIA, but it was difficult today. Again, the by far the best trade was, I thought, of the stocks that I look at, the indices, stocks that instruments that I look at, SPX, SPY, ES, S&P 500. All right, here's QQQ. And nice short setup here. Let's go take a look at Hero. And somewhat of a divergent short here, not as clear as the S&P 500. But Hero is definitely making lower highs. Price makes lower highs and then drops as Hero continues to drop. All right, let's go back and take a look at Bookmap again. So there's the reversal at the 296 volatility trigger. And again, remember we just looked at Hero. It was starting to move lower. And then the quick drop, the last test of 296, quick drop lower. And then, if you were fast and didn't catch that, it didn't anticipate the short there. You could have caught that for maybe a 1.5 points. All right, so that's QQQ. Now let's take a look at, we'll go back to the S&P 500. And let's take a look at the difference in the Hero charts for, let's go back to SPX and SPY. So this is the total signal. And I think this provides or it has in the recent, the last few days, recent few days, the kind of the cleanest setup, the clearer signal. So it's combining this, SPX, and this, you really don't see this divergent setup here in SPX. So let's go take a look at SPY. And that divergent setup is a little bit more clear. So when you look at the combined signal, you're always getting, again, the combined signal. This is what is driving price action in the futures. Market makers are hedging their SPX and SPY options trades with ES futures. And so there's a question, have you found QQQ follows hedging flow strongly with convergence, divergence? And there, I think I would look, well, first of all, the divergent signals that I see are most apparent and occur most often with the S&P 500. Those are the best, the longest divergent signals, the best levels for reversal. For the S&P 500, I have more information, levels, Hero, than any other instrument. So that, yeah, no, but QQQ and also my trading record is a lot better with the S&P 500 than QQQ. QQQ often will have a stronger convergence or confirmation with Hero than the S&P 500. So if you like to trade indices and you find that Hero is going one way and for ES it continues, S&P 500 continues to go another way, then look at QQQ. There's often a stronger convergence or confirmation. But in this case, there was a divergent setup. Let's go back to Bookmap. So there was that divergent setup confirmed by order flow. And just one more note about the S&P 500. You really have to look at all the signals. Look at, start with the SPX plus SPY. Look at SPX. I mean, there could be days where SPX is primarily driving, and then other days where SPY is primarily driving. So you just have to do your, do your homework, do your detective work, figure out what is driving price action today, and then follow that signal. But the starting point would be the combined signal. And then finally, let's look at Tesla. So here's Tesla in Bookmap, and this is a very good stock to trade. And it shows a strong confirmation between options trades, hedging flow, and price action almost every day. You can see the strong correlation between hedging flow and price action. And Tesla was pretty choppy today for the most part. And with Tesla, it often helps to separate out puts and calls. And you can see that traders are buying calls today. And that was definitely traders buying calls. That's shown by the rising orange line. And price action corresponding very closely. And I think this is because market makers hedge options trades in price in Tesla almost immediately. So what's happening here is traders are buying calls, market makers are selling calls, and they have to buy Tesla stock to hedge their delta exposure, and they're doing that right away. So that, I think that leads to the strong correlation, strong confirmation. All right, let's go back and take a look at Bookmap. Tesla, you can see in the morning all the green dots in this first jump higher, confirmed by cumulative volume delta. Then that levels off, and now notice all the pink dots coming in from around 11 to 12:30. And then the call buyers come in and start to drive price up. Interesting that Tesla is on Monday here almost up at the upper edge of the expected move, this UEM, and that is from the options market. And I mark those on my charts as well. I get that from Thinkorswim. And let's just take a look in Equity Hub. I want to take a quick look at Tesla in Equity Hub. Check the levels. So Tesla call gamma dominated above 220. And a shift higher in the call wall. I just wanted to check that 210 level, and it was the call wall on Friday. And notice now it shifted up to 220. So that is bullish, and then this is somewhat bullish here. bearish. Put wall shifted lower. Okay, so that's all I have for today. And let me check for any final questions. Yeah, Tesla traders have been really, been bullish on Tesla recently. It has risen from 100 all the way up to now close to 210. And yeah, I do think the high IV, the high beta, does lead to market maker hedging activity responding very quickly. At least that's what I'm thinking based on how I see day after day the strong correlation between options trades and hedging activity and price action. Okay, that's all I have. I want to thank everybody. Thanks for watching. Thanks for your questions, comments, and I will see you tomorrow. Thanks again. Bye.